Today I want to talk about the success of people buying their own homes, whether they're first time buyers or they're second or third time owners, if you like, because there's a lot of negativity around this, and there really shouldn't be, because there's some great success stories where young people have got on the property ladder and have saved money by reducing the time they pay their mortgage back in, basically. So I just want to take a minute in mentioning my book Move Right, which is all about buying and selling and doing it in the correct way and how to save time and money. So that's very important, and that's available on my website, of course. So it's amazing to think that 2/3 of first-time buyers are actually overpaying on their mortgage in order to reduce the time it takes to pay the mortgage off. And that's up from 50% in 2019. 1 in 6 first-time buyers want to pay their mortgage off by the time they're 40. Well, we'd all like to do that, and some of us have achieved it, some of us haven't. So overpayment is the key to this story. So why are people looking to reduce their mortgage as quick as possible? Well, of course, people don't like debt. You know, most people want to feel that they're not under any financial pressure. And of course, if someone loses their job or anything else and they've overpaid on their mortgage, then they've got a bit more slack, if you like, in the fact that, you know, they're not under the same pressure as if they would be if they hadn't paid anything off their mortgage. Also, which really means peace of mind, doesn't it? We all want peace of mind. And of course, financial freedom is a real buzzword. It's not a word that I use that much, but I know 1 or 2 property educators do. And actually, on this occasion, I think it's a good name for what we're talking about, really. We're talking about having less risk, less debt, which is never a bad thing. So the pros, of course, of paying your mortgage off early is that you're saving literally thousands and thousands of pounds in interest. Just to give you an idea, if you had a 300,000 mortgage over 30 years and you paid back over 25 years on an average interest rate, you would save £50,000. And if you paid it back over 20 years, you would save £100,000. Now, if I put £100,000 down on my desk here, or any desk, or any coffee shop I go into, who's not going to want that? So if you can pay your debt off quicker, it makes a massive, massive difference. And even better, rather than have a mortgage over 30 years, if you can cope with a mortgage over 20 years, do so, because that's an even better way of doing it. And then if you can cut that to 15 years, you're going to be saving £150,000, huge amounts of money. And, you know, why wouldn't anyone want to do that? So, of course, not everybody wants to do that. Some people want to still spend money on holidays and have a good time and not worry about the mortgage because they know that in 25 years or 30 years it will be paid off. You know what? That's absolutely fine. You might have an investment elsewhere. You might have more property investments which you feel, well, actually, in time I can sell those off and pay my mortgage that way. If that's what you're doing, that's great. But if you're not doing that, if you've only got one property, then this strategy is absolutely brilliant and you really need to take it seriously. And of course, don't forget, my book, Move Right, tells you how to do it. See you next time.